G.K.Jain school. Today we are going to continue the theories of employment and income. Today we are going to see the aggregate supply function. How the aggregate supply function plays a vital role in economy. How the economic activity depends upon the aggregate supply function. And why this aggregate supply function plays a vital role in economy. All these factors we'll see today. Okay. Let's see what is the meaning of aggregate supply function. Aggregate supply refers to the value of our total output of goods and services produced in an economy in a year. So it is nothing but when a company, a manufacturing company in a particular year, how much they are manufacturing a product. For example, we have the Apple industries, the Apple phone, iPhone is there. How much they are producing in a year. For example, in the year 2019 and 20, how much phones they have produced. That is what the value of that will take in order to affect the economy. So this production, how affect the economy, we will see. So aggregate supply means nothing but it's a creation of, it's a counting of, it's a advertising of how much output the person has manufactured in the particular year. Okay, for example, you are the manufacturer of some product. For example, take a TV. Okay, you have the TV industry. For example, you have a company where you manufacture a TV. Okay, when you manufacture a TV in a particular year, how much TV you have produced, and this how will affect the economy, the study of that is known as aggregate supply function. Is it? This aggregate supply function is dominated by C plus S plus T plus RF. So with the help of this mathematical formula, you can identify the aggregate supply. How? C plus S plus T plus RF. Okay. C means aggregate desired consumption expenditure. So C means a consumption expenditure. Then there is an industry. In an industry, what kind of consumption expenditure has been done? So for eating, for meeting the personal expenses, for meeting the professional expenses, for your self-benefit and other feeding aspect, how much you have consumed, thus expenditure you take, plus add the savings, the private savings you have some saving, add that saving, plus add the net tax payment. With that, add the net tax payment. The net tax payment can be calculated with the help of total tax paid. You will pay the tax, the total tax, minus transfer payment. For some transfer payment will be there, like you have the account, from here you have transferred some money, that you will take. Subsidy, the government will give the subsidy, LPG subsidy is there, electricity subsidy is there. So all this subsidy plus interest payment. So from the bank you get interest, investment company you get interest, loan you get interest. So all this interest. So all this minus the tax you have paid, you will get the net payment tax. So consumption plus saving plus tax plus RF. RF is personal desired payment, which is nothing but a donation, a type of donation you get from the someone for doing the extra work, or a payment from the foreign companies for the work you have done for them. So RF means it like of a donation. Okay, so say consumption plus saving plus tax plus donation item. If you calculate this, if you add together, you will get the aggregate supply function. What is the aggregate supply function? It's nothing but a simple relationship with the total output of a company, how much they have produced the total product in a company and in a particular year. For example, in 2019, how much they have calculated. With the help of scientific formula, C plus S plus T plus RF, you can identify. With the help of diagram, let's understand it in a deep way. We have drawn the diagram, x-axis, y-axis. X-axis we have given to the employment, y-axis we have given to the expected proceed. Okay, and we have drawn the NF. NF means full employment. This is the line where the full employment, every individual, every population, every person living in a country will be employed. They will have a job. This is the line where every person will have a job. Who wants the job, who is willing to do the job, will have a job. That is what we call NF. So Z1. The Z1 curve represents the full employment. So when the curve Z1 reaches to the NF, which means there is a full employment. But the Z1 is a linear where money remain constant. So when there is a wages, for example, the theory of employment says that if wages reduces, what happen? Employment increases. But when money will remain constant, what happens? The employment will not increase or not decrease. So Z has not reached the NF. Easy to understand. We have Z1, we have Z, and we have NF. NF means where the full population have the work, whoever willing to do the work. So Z1 up is where the wages is increasing and employment is increasing. Z1 money remain constant. That's the reason no employment increasing. NF means full employment where every person has the work. Okay? Let's see the proceeding of the curve. AS depends upon the wages and price. Aggregate supply wholly depends upon the price and wages. So if there is in a company, if there is a price system and wages system, you can identify the aggregate supply. Easy? With the two aspects, you can understand the entire aggregate supply function. What are they? First, if price is high, wages is low, what happens? The effect will be employment increases. Price is high, wages is low, employment increases. Simple how? I am the owner of a company where I have fixed the product value of 100. Okay? And after few months, the product value I increased to 150. Okay? The wages I had for every worker was 10,000 rupees. After some time, I reduced to 9,000 rupees. So what happened? In this scenario, I should have the extra employment because I am earning the extra money and I have saved the money from wages reduction. That's what we call more laborers. If price is high, wages is low, production will have the more laborers. So if price is high, any product who is manufacturing, if the price of the product is very high, what happen automatically? Wages will be low. The producer, who is the manufacturer industry person, they will employ the more labor. In the vice versa, if price are low, for example, I had a thing, I sell it for 100, but after few times I am selling for 90. So there is a low in price. Wages is high. Wages by 10,000. Now they are demanding the extra, so I am paying the 12,000 wages. What happened? The investment will become low. So whatever investment I had, it will become low. Output will fall. Output means the total production I am doing will fall because I am having the extra expenses. Because of that, I cannot have the extra production as well. When output is down, when production is down, what happened? I will reduce the labor. When I am producing a 10,000 pieces of any product, for example, I am having the fan business. I am producing the 10,000 fan every month. But when I am not producing 10,000, I am producing 8,000. This 2,000 sorted, how I will calculate means I will reduce some labor. So with the help of that, I will reduce the labor. ASF in an important aspect in economic activity. Simple. Economic activity can be understood with the help of aggregate supply function. Aggregate supply function, you can understand that the unemployment problem with every country nowadays is falling for. How you can solve means you just reduce the wages. When you reduce the wages, you can have the extra person work and the unemployment time will reduce. In the next class, we'll see the equilibrium and the difference between classism and Keynesism. Okay, thank you.